Hi guys, quick market update for you to give you an idea of what's going on right now. There's no way around it. It is ugly. So mortgage bonds, they kind of settled into a nice trading range there for a little bit, gave us some stability, but that's all changed. So to give you a little background on this, so in April, there was kind of the growing sentiment that maybe inflation had reached its peak. And inflation is the natural enemy of mortgage rates. So anything that says that inflation is getting under control is going to be good for mortgage rates. Anything that says that inflation is uh, running rampant is going to be bad for mortgage rates because you think about it, if you're a mortgage bond holder, you're going to get a fixed rate of return, conceivably for 30 years. So if you're only going to be getting X amount in return, you want to make sure that inflation isn't going to eat away at all of those profits. So in April, we thought that maybe that things were cooling off. Inflation was at its peak. So everybody was looking towards the May numbers, which will be announced in June last week. Um, and the hope was that the inflation numbers were going down. Well, instead of going down or showing that they had leveled off, they showed an increase up to 8.6%, which is now brought all the market's attention towards the Wednesday Fed meeting. So the Federal Reserve, they have their meeting where before they've this year they've raised interest rates fairly regularly at about a 50 basis point clip. Now, what's really important is that you're going to hear news stories that say Fed raises rates. That is not mortgage rates. So by raising rates, they're actually trying to combat inflation. So anything that comes from the Federal Reserve that the market deems will help them get ahead of the curve on inflation would actually be good for mortgage rates. So the growing sentiment is that instead of doing their normal 50 basis point hike, that they're going to do a 75 basis point hike. So this would be monetarily restrictive. This would be an effort to combat inflation, which could potentially push mortgage rates down. It's all about how the market reacts, not only to just that announcement, but are they buying what the Federal Reserve is selling right now? They are starting to lose a little bit of credibility in the investors' eyes that they can get inflation under control. So if they do that and they come out with notes in their press release and in their interviews post that announcement that the market believes that they can get inflation under control, then you could see mortgage rates pushed down. Or the reverse could happen. So maybe they come out a little bit tamer. Instead of raising rates by 75 basis points, they only do it by 50, what they had in half. I don't think that that's going to happen, but if they did, for instance, that could push mortgage rates actually higher. So in the meantime, I wanted to send you a rate update so you know kind of where that's at. Tomorrow's going to be a very important day. Usually what I expect is that the market will be very tumultuous tomorrow because it takes time for the markets to kind of digest news. They will obviously be watching the Federal Reserve's notes very closely, and a lot of times you'll see a lot of overreactions. And then by Thursday or Friday, we'll kind of have the verdict on what that will do to rates here, at least in the short term. So, important day tomorrow, but at least wanted to give you an idea of where rates are at right now. And we will hope for the best. And if you have your eye on any homes, please continue to let me know which ones those are. I can run numbers for you in advance, and we'll hope for the best from the Federal Reserve meeting tomorrow.